Welcome back to today's More Report on Tuesday the 9th of February with me, Richard Perry, Market Analyst at Antec Markets. Let's look at this. Sterling continues to fall away, but we've just had out the UK trade data, slightly than expected, to minus 9.9 billion, down, which is an improvement on the 1.4 that had been anticipated or expected. And that should be slightly sterling supportive. It's not really done a great deal to move the market, I have to say. But looking at the technicals on this, we've sort of seen the drift away, or I say drift away, the sort of falling away in the last couple of days of sterling, and that is now back to the key level, I think, which is 43.50. Which is not only the 21-day moving average, you've got the support of an old breakout, which I can show you on the intraday chart. Old breakout pivot at 43.50, hit bang on pretty much yesterday, almost to the pit, 43.51. And also, that's the around where the 23.6% Fibonacci retracement level is of this sell-off. So I think that's there's several reasons why this is a key level that we need to watch. And it held yesterday, and it's not yet been tested today. But I think this is a level that if we lose that, then I think I'm going to have to turn neutral at best, if not negative, because I think that you'd sort of lost the momentum in the recovery then. Whilst that level is intact, I think you can still argue you're sort of holding on to an element of support there. And the momentum, RSI, is back to that downtrend, isn't it, interestingly? Zooming out, you can see that big downtrend from the May 2015 lower highs. We've now broken that sequence of low highs, which would suggest improving momentum. But you have got the stochastics, so that which have turned over and given that crossover sell signal. So that's corrective. So you've got mixed signals now on this cable chart, which is why you're sort of far less positive than you were. And you're sort of looking a bit more under pressure. Now, the moves that we've had today would suggest that we're 43.50 there. We're sort of trading between there and the 44, 45 area, which is a pivot level, isn't it? Breakout, old low, and is becoming the basis of resistance now. So this is a pivot level on the upside. So if you'd need to see a decisive move above 44.50, I think, to really suggest that the bulls are sort of trying to bounce back. You've got this sequence of lower highs now. Ideally, you'd probably want to be breaking through that reaction high at 45.45, which was yesterday's high, which would suggest a turnaround. But you've also got the, I mean, look at this, interestingly enough, I've just noticed this, the 55-hour moving average, basis of support, a couple of times, rolled over, becomes the basis of resistance. And that's at 44.66 at the moment, so that is falling away now, so that could put pressure now, once again, to the downside. The other thing you need to worry about, if you're bullish, is this RSI falling over around the mid-50s. It's back at 50 now, a level at which your chances are, if you see this is a bearish move, you'll see the sellers coming back in now. So if you see the RSI rolling over, again, that would be around about where that resistance at 44.50 is. This all sort of ties into the fact that if we see a failure at that 44.50 level, then you're going to see probably a retest of that 43.50 level. So lots of sort of changeable near-term outlook indicators there. And at the moment you're sort of trading in this 100 pip band of sort of almost no man's land. If you break below 43.50, you're negative. If you break above 44.50, you're looking more positive again. Yeah, it's sort of on a knife edge at the moment, cable on the near-term outlook, so interesting times. But I wish you good luck in your trading today, and I'll speak to you later. Thank you.